The AI boom is far from over, but the easy money has already been made. Now it's about finding the companies building the permanent infrastructure of the future. Morgan Stanley expects global data center spending to hit a staggering $3 trillion by 2028. Today, we're breaking down a recent Motley Fool report highlighting two powerhouse AI stocks positioned to crush the market over the next 5 years. One just had a massive 30% dip that screams buying opportunity. The other is quietly stealing market share in the AI server space. Let's get into it. The tech-heavy NASDAQ 100 has consistently beaten the S&P 500 over the last decade. And the megatrend keeping that streak alive is AI. But we are moving past the hype phase and crossing the bridge into the infrastructure phase. That brings us to our first stock. Stock number one is the software king itself, Microsoft. Right now, Microsoft is sitting about 30% below its recent highs. Wall Street has been sweating over how much it is spending on capital expenditures, projected at roughly $190 billion this year alone. But if you're a long-term investor, this dip is exactly what you want to see. Here's why. Demand for their cloud and Copilot services is absolutely exploding. Microsoft's annual recurring revenue from AI just surged 123% year over year to $37 billion. And to keep up with a backlog of over $600 billion, they are literally doubling their data center capacity over the next 2 years. Management has been clear. These investments are seeds planted today, designed to generate massive returns over the next 5 to 15 years. And they have the cash to do it, generating $170 billion in operating cash flow last year. At a forward price to earnings ratio around 20, with analysts projecting 16% annual earnings growth, Microsoft is trading at a highly attractive valuation for a company building the backbone of the AI economy. That brings us to stock number two, and this one is a bit more aggressive. Advanced Micro Devices, better known as AMD. They've already been on a tear, surging over 150% year to date. But analysts think this is just the beginning of a massive bull run through the end of the decade. The catalyst? AI inference. While everyone talks about training AI models, the next massive wave of demand is inference. Basically, the AI actually answering your prompts and doing the daily work. New agentic AI tools require serious CPU power to run efficiently, and AMD is stepping up. In the first quarter, AMD's server CPU revenue grew by more than 50% year over year. They are aggressively stealing market share from Intel, driven by their next-generation EPYC Turin processors. But they aren't stopping at CPUs. Following their acquisition of ZT Systems, AMD is now designing complete rack systems for data centers, going toe-to-toe with Nvidia. Their new Helios rack-scale architecture begins shipping in the second half of 2026. Yes, AMD trades at a steep forward PE of 74, which sounds expensive. But when analysts expect earnings to grow at a blistering 59% annually, that premium makes a lot of sense. So, to wrap it up, you have Microsoft offering a rare 30% discount while aggressively expanding its cloud empire. And you have AMD positioned perfectly to capitalize on the next wave of AI inference and hardware. Both face near-term headwinds in the consumer PC market, but their enterprise growth completely overshadows that risk if you have a 5-year time horizon. So which of these two stocks do you think will perform better by 2030? Let me know down in the comments. I read every single one. And if you got value out of this video, hit that like button, subscribe for more stock market deep dives, and I'll see you in the next one.